Hi guys. Today we will analyze Franklin Resources stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a bad performer in the overall market. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Support levels are around $25.30 and $24. Next support levels are around $22 and $20. Resistance levels are around $27.50 and $28.80. Next resistance levels are around $32.30 and $35.80. In the last month the stock has been trading between $25.60 and $29 range. It is currently trading near the lows of this range. The stock has an average volume of 3 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since November 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average P/E ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $70.12. When we apply the margin of safety to that value, the fair value of the stock would be $49.08. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Franklin Resources is 3.79. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Franklin Resources, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 7. I will use 3 different scenarios for Franklin Resources Company: bad, average, and good. First scenario. Franklin Resources will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 2%. Future P/E would be a low, 8. In this case, the fair value of the stock today would be $15. Second scenario. Franklin Resources will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 3%. Future P/E would be average, 10. In this case, the fair value of the stock today would be $21. Third scenario. Franklin Resources will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future P/E would be high, 12. In this case, the fair value of the stock today would be $27. As you can see, today the stock is fairly valued, $26, if we expect the company's high performance in future. Franklin Resources is a dividend aristocrat. It has increased its dividend annually for the past 42 consecutive years. The stock looks fairly valued. However, the revenue will grow only by 3% on average per year in the next 5 years. The stock has been in a downward trend since November 2021. I like the stock at these levels. I own the stock, and I buy the stock from time to time. I like the dividend, 4.43% yearly. And I will buy more when the stock shows signs of reversal. Company's strengths. Franklin Resources is an American multinational holding company that, together with its subsidiaries, is referred to as Franklin Templeton. It is a global investment firm that's serving retail, institutional, and high-net-worth clients. Franklin Resources and T.Rowe Price are two of the oldest, most established asset managers in the world. The purchase of Legg Mason has lifted Franklin's assets under management to more than $1.5 trillion, hoisting it into the second-largest tier of U.S.-based asset managers, which includes firms like Pimco, Capital Group and J.P. Morgan Asset Management. Franklin maintains thousands of active financial advisor relationships worldwide, and has close to 1,000 institutional client relationships. The company is growing through acquisitions, and is a consolidator in the asset management industry. Franklin is a dividend aristocrat. It has increased its dividend annually for the past 42 consecutive years. With a yearly dividend yield of 4.43%, the stock is a good candidate for dividend investing. The company's return on assets of 8% is amongst the best of the industry. Its return on equity of 17% is in line with the rest of the industry. Its debt-to-equity ratio is in line with the industry averages. Risks. Risks include potential depreciation in global equity and bond markets, and an accelerating retail shift to passively managed investments, which could result in net asset outflows. The firm operates in a highly regulated industry. This fact leads to high requirements for compliance. Along these lines, data breaches and employee misconduct are also legal and reputational risks. The company faces risks for continued fee compression, and underperformance of its mutual funds. Profit margins will be under pressure, as asset managers spend more heavily to improve investment performance and enhance distribution capabilities. Franklin's profit margin of 22% is below the industry average of 26%. Based on estimates for the next 5 years, the company will show a very small growth in earnings per share. The EPS will grow by 3 to 5% on average per year. In the coming 5 years, the revenue will grow by only 1 to 3% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.